Arna has been first to report, and that tradition carries on in the second quarter. Sales dropped 15% from a year ago, and also slumped quarter on quarter. So that's quite a bit lower than we were expecting, but our forecast was made because they were so early to report before. It was made a long time ago, before we started really cutting the numbers. So that's what the sales looks like. We expect sales will rebound third, fourth, and hit a new all-time high in the first quarter of next year. The sales growth we're expecting is 6%. So when the sales dropped, the cash flow has dropped. This is quarterly cash flow even more, down to just 9 billion. The 12 months still quite strong at 240, but with our sales growth, the cash flow will now bounce back, and there'll actually be a record free cash flow over the next 12 months. So in the balance sheet, net debt has turned to net cash starting 2018 end, thanks to all the growing cash flow, got up to 300 billion. It's dropped in the first half of this year as they paid out over 160 billion dividend, and the cash flow of course dropped. But over the next 12 months, with our forecast for stronger cash flow, the net cash will rise back up, including a dividend of 149 billion, a little bit lower than last year. In profit, although our sales missed quite a bit, the profit was actually 10% higher than we expected, because the cash cost ratio has gone from 85 to 80%. The average is 83%, so we use 83% to forecast the next 12 months profit of 263, which is up 11%. There we go. So this is the valuation. That's the free cash flow, 334 billion, using our 1.6% with a very large discount. Otherwise it would just simply be way too high. The yield is 4.8%. That gives a target price of 1,432, which looks like that. This is a stock that we own and we like.